All right. Thank you guys for being here. Let's begin this wonderful Twitter space. All you want to know about cross-chain MEV market. So first of all, I still like to thank every listeners and all the guest speakers here to join this awesome uh, talking places to discussing cross-chain MEV. So first, I like to all the guest speakers to give a 1 minute self-introduction about themselves. So let's start from Alex.
Hello, everyone. First of all, thank you guys for hosting this space because I think this topic is really interesting. It's something that is not really discussed a lot on Twitter and like crypto space in general. But yeah, to introduce myself, my name is Alex. I'm CEO and co-founder at dBridge. We are building cross-chain interoperability infrastructure. Our main focus is high performance interoperability. And yeah, we like in the bridge we are taking quite unique approach because we are building the cross-chain trading infrastructure based on zero TVL design. So we are probably one of the first teams in this space to say that like bridges don't need to lock liquidity. Bridges don't need to be honeypots, right? And if there is no lock liquidity, then like the cross-chain space can be way more secure. So yeah, that's what we are building. In dBridge and DLN as a trading infrastructure built on top of it. And yeah, excited to be here with you today and discuss the topic of cross-chain MEV.
Okay, thanks, Alex. So next one is famous searcher, Bridge Baron. So Baron, would you please introduce yourself? Thank you.
Hey everyone, thanks for having me. Yeah, my name is Bridge Bear and I'm active participant in MEV competition, and I consider this space to be vital for discussion of cross-chain MEV market because it's pretty implicit and it's been solid for years for now, and I think in future we'll have more possibilities of like more revenue sharing and like the enhancement of PBS systems, etc. As well as the evolution of L2s. I think like cross-chain markets for MEV, they will become more scalable than now. So thank you.
Okay, thank you, Baron. So next we have Julian. So Julian is a researcher at Ethereum Foundation. So Julian, would you please introduce yourself? Thank you.
Hi, everyone. Thanks for hosting me. So I'm Julian. I'm a researcher at the Ethereum Foundation, where I work within the Robust Incentives Group. My research interests broadly span market microstructure, mechanism design, and game theory. And currently, I'm working on proposer-builder separation and how we can handle the cross-domain MEV in this setting as well, being Ethereum.
Okay, thank you. Next one is Matt. So Matt is from ODAS XYZ. So yeah, Matt, please introduce yourself. Thank you.
Yeah, hey everyone. Thanks for having me as well. I'm Matt from Odos. Odos is primarily a DEX aggregator, so we focus on all the AMMs and aggregating and then optimally routing through them. I've also done a bit of research into cross-domain arbitrage and how we can solve that problem of routing as well, but that's more of a research topic at that point. So.
Okay, the last guest speaker is our lead data scientist, Dr. Yixin. So, Dr. Yixin, would you please introduce yourself?
Hey, everyone. I'm Yixin, a data scientist from AgenFi. I'm very glad to be here to talk with our guest speakers about the topic. And actually, I'm paying attention to cross-chain MEV about 2 years ago, and I'm very excited to share ideas and get more information and perspective from other speakers. Thank you.
Okay, thanks for all the introductions. I think all these wonderful speakers is going to give us a lot of great insight in terms of cross-chain MEV market. So I'd like to start with the total cross-chain volume. in the first half of 2023, so this total volume of cross-chain has already reached like 80 billion US dollars. So it's gonna be a ton of MEV chains come along as well. So I think a better and fair system will make the game more fair and square. So my first question is about the status quo. So I want to ask all the guests here, like, what's your first impression and intuition about this cross-chain MEV market? So I want to start from Alex. So Alex, would you like to be the first speaker about this question? Thank you.
Yeah, absolutely. So I would like to get started from thinking about like whether the cross-chain MEV exists at all and whether it will exist in the future, right? Because like, what is MEV and like when it may appear? And my guess here that MEV appears whenever we have synchronous compatibility. So MEV is caused by sort of synchronicity of the systems, right? And like historically, everyone is building the protocols and DeFi primitives within the same chain, right? Where like different smart contracts or different DeFi primitives can be plugged into each other. And synchronous compatibility means that we can sort of combine interactions in the same block, right? So we can perform interactions between various smart contracts or like various protocols within the same transaction or the set of transaction calls. And normally, from what I see, MEV appears whenever there is on-chain price discovery, right? Whenever there is AMM model involved. So somebody does the trade, like on some DEX, and then like bots can sort of front run or like perform the sandwich attack on this trade. And they're doing this in the same transaction. And it's just like all the developers and like most of the teams are used to build synchronous systems. And but the point to that, like in many cases, the synchronicity is not needed. And if we design asynchronous protocols, that gives the better sort of price efficiency and the better price discovery mechanisms. Because in this case, instead of focusing on the block space and sort of competing for the block space, we can actually focus on more efficient price discovery. And one of the good examples here would be probably 1-inch fusion algorithm. Because like before there was a big problem. Whenever you trade on 1-inch, you like specify the slippage tolerance parameter, and there is a big chance your transaction getting front run in case you are not using RPC or flash bots or like other RPC protected from that is bypassing like public memory pool. But what 1-inch did, they did this sort of fusion algorithm that works asynchronously, right? You create the trade, and then the trade is executed not in the same block, but it can be executed like in a few blocks after. And you specify the price, like the minimal price at which the trade should be executed, and then the price goes steadily down, right? And this sort of asynchronous design helps to prevent MEV. And I think that like in the cross-chain space, we have MEV now only because all the bridges and all the cross-chain protocols are built synchronous, based on synchronous design and based on liquidity pools. So they still have AMM model involved. But if you manage to build fully asynchronous cross-chain infrastructures, I don't think that MEV will ever be possible, because like MEV itself appears only when there is like synchronous compatibility. So yeah, here would be interesting to hear you guys, like what types of like MEV exist in general, and whether my assumption about like existence of MEV only when there is like AMM model involved, whether this assumption is correct or not. But yeah, if you have any thoughts here, would be interesting to discuss.
Okay, Baron, so I don't know whether you have a similar observation on the cross-chain MEV market. Would you please share your 2 cents?
Yeah, so my thoughts are that the cross-chain MEV market has been already like possible for years, and in my opinion, if we rely on the definition of Ethereum regarding the MEV, it's a ton of work that needs to be done in order to have similar example like Ethereum has. Basically, to make PBS systems cross-chain, it requires a lot of time because EVM chains, in distinction, they have very solid differentiations. For instance, gas escalation does not work in all EVM networks, and even EVM, like EVM, the EVM machine, it's not like it's distinct on different chains, basically because not all the opcodes are supported from the Ethereum. And I think we need to utilize like the bridges and to understand which strategies can be built on top of them. And in my opinion, like the MEV on L2s can be much more like evolutional rather than like cross-chain comparison between like L2s and like EVM networks, because there are a lot of distinctions between EVM networks, and that is why you need to have like very smart either cross-chain protocol that will allow to maintain to offer services for MEV extraction. Otherwise, you need to implement these features on your own. So it's more about like implementing the pros and cons of different EVM networks, I think. So that is why we have more retail traders making their own bots and maintaining simple arbitrage bots between like Phantom and Ethereum that can also make money for them. But from my own experience, I can say that I have not targeted cross-chain arbitrage series because there are no. If we take 2 years from now, there were no like very like good bridges to use, and you might face like the delays between liquidity management. So I've only targeted a few EVM networks, so I can't say like I don't have empirical evidence of the downsides, of real downsides of cross-chain MEV.
Okay, yeah, we did observe some kind of cross-chain MEVs that has been the bridging has been delayed for like 22 minutes. So if you guys are interested, you can find more this kind of transactions on their token flow charts from the comment section. Okay, so next one, let's continue to Julian. So Julian, from the Ethereum Foundation's point of view, so like what's your impression on the cross-chain MEV market?
Right, so I think cross-domain MEV is a very difficult but also very interesting problem. How we're looking at it is from the perspective of PBS. So how do we implement a contract between a proposer and a builder that allows for cross-domain MEV in the extent that we want, but does not work into more centralization, for example. So a thing that we've been researching is how much does the time difference between your commitment to a certain transaction and the transaction being executed matter for example, arbitrage between a centralized and a decentralized exchange. And there's some preliminary findings in there that we hope to work out a bit more. But I think that in general, cross-domain MEV is very important for decentralized exchanges because it allows for a bridge of information between a centralized exchange, which is by assumption where most information originates now, and a decentralized exchange. And if we want to have very informative prices, high informational efficiency of prices, high price informativeness, we're going to need to address these cross-domain MEV problems. And the market for this, or like the coordination mechanisms that currently allow cross-domain MEV, are simply not well developed enough.
Okay, thank you, Julian. So next is Matt. So Matt, so your guys' product is kind of like a like facilitating this cross-chain MEV. Am I right? If it is, so would you like to share some data regarding like how many cross-chain MEV you guys have been observed or facilitated? That'd be great. Thank you.
Yeah, so I guess we have our main product is an aggregator that actually provides routes within one chain. So that can be used as a sort of a building block to capture cross-chain MEV if you're executing a route on two different chains. We have also done some research into more directly computing a route between two chains, and one of those pieces that we have public is an arbitrage tracker, but we haven't actually gone as far as trying to execute them because of the challenges associated with it, which is mainly around basically losing all the really nice assumptions you have when capturing MEV on a single chain with sort of, especially on Ethereum with private block builders, these not having reverts and not having partial execution. That all goes out the window with capturing on multiple chains, as well as stuff like flash loans. So I think all of those roadblocks make it very hard to break into the cross-chain MEV market compared to capturing MEV on a single chain. And I think some of that will potentially change as things are made and infrastructure is built to make some of that easier. But for the time being, I think it's a largely untapped, at least not tapped into as efficiently as single chain by a large margin.
Okay, thank you, Matt. So next is Dr. Yixin. So would you like to share your observation? Thank you.
Okay, I think I will share my impression from a viewpoint of a data analyst. And I first came across about this topic or this concept actually from when I was reading an article from Phil Diane, where he stated that MEV is fundamental. The reason is that there are multiple blockchains in the industry. We do not only have Ethereum, we also have BSC, Polygon, Phantom, and so on. The fact is that all these various blockchains do not have an identical safety assumption or some identical consensus protocol. So there's always some difference between the blockchains. And when we provide some service to ensure composability to users through cross-chain bridges, for example, there is definitely MEV present at these boundaries due to information asymmetry, I think. And I agree this viewpoint, and I think it makes sense. And in the same year, I also noticed that some searchers had already 2 years ago, had already started using multi-chain for cross-chain arbitrage. At that time, multi-chain was still called AnySwap. And however, even though there were early adopters, the overall market for cross-chain MEV seems to have not gained much attention from the industry. Compared to the typical MEV transactions within a domain, like sandwich or atomic transactions, atomic arbitrages. Instead, there have been more theoretical discussions around the topic. For example, some guys from Flashboards generalize the idea of they create a new concept, cross-domain MEV, to include sidechains and layer 2s into their theoretical framework. I think the main reason that cross-chain MEV is not so popular compared to the MEV within Ethereum is that the transparency of cross-chain transactions is currently very low, and we lack some relevant data analysis tools to showcase the development of the market. Additionally, I think cross-chain bridges are still immature, and frequently we will see some attack incidents around the bridges. this kind of events attract more public attention rather than the MEV market among the cross-chain bridges. So I'm really excited to be here to get more perspective and information from other speakers and our audience to have a new idea of this market. Thank you.
Okay, I believe all these blockchains are definitely creating all kinds of obstacles for traders and new innovations and creations. So, for example, like permissionless is definitely one of them. So my next question is like, what are the top challenges like when enabling a permissionless cross-chain MEV market, and how to address them? So this time I would like to start from Dr. Yixin.
I feel like this question can be addressed by our guest speakers better, but from my naive perspective, it is similar to the question of how to fit an elephant into a refrigerator. So in order to achieve a permissionless cross-chain MEV market, I think the first point is we need to have a cross-chain tool that enables permissionless transactions, which we already have. And second, it is crucial that we are able to achieve the atomicity of the cross-chain transactions. And the third point, we hope to achieve the atomicity of composition of several cross-chain transactions, just like sending bundles to block builders within a domain. And currently, some cross-chain tools already provide features that satisfy the first one or first 2 points, although maybe the security of the underlying mechanism remains a concern. However, there is currently, as far as I know, there is currently no cross-chain product that is available to fulfill the third point. I think this presents a significant challenge in achieving the desired objective. To elaborate a little, if a searcher cannot ensure that multiple transactions can be executed in the intended order without being reordered or censored, they cannot carry out MEV arbitrage strategies without risking potential losses. And in such cases, they can only rely on uncertain strategies that expose them to various kinds of risks. And this challenge can potentially reduce the attractiveness and efficiency of the cross-chain MEV market. And actually, we have observed an interesting case of cross-chain arbitrage, which was also mentioned by Brian, where the searcher attempted to transfer tokens from BSC to Polygon. However, he faced a delay of 22 minutes before the token were received on the target chain. Unfortunately, by the time the token arrived, the arbitrage opportunity had already passed, and leaving the searcher unable to extract the MEV. And consequently, the user had to transfer the tokens back to the original chain, where the token price was more favorable at that time. So without addressing such kind of problem, it seems hard for the cross-chain MEV market to develop dramatically. That's all my thoughts about this question. Thank you.
Okay, so next is Matt. So yeah, would you please share your opinion on this?
Yeah, so I would really just focus in on the lack of atomicity and coordination that we already mentioned a little bit, but that's really the main roadblock to sort of creating a sort of system similar to like what Flashbots was before the merge and PBS is now, where you have an open system that anyone can really come in and participate in. Right now with cross-chain MEV, if we focus in on arbitrage in particular, essentially what you need to do now is you need to actually have a large amount of money, because you need to basically own the assets on each chain so that when you want to execute an arbitrage, you can basically do so at the same time in parallel. So you don't have to wait for bridges, because if you wait for bridges, the opportunity will go away, or it's likely to go away. So in not only do you need to have the money, but you also then need to deal with the consequences of partial execution. If one executes and the other doesn't, then your arbitrage turns into basically a very large buy or sell order, taking a position in the market, which is very bad. So in order to have this same sort of all or nothing sort of inclusion, you need to not only coordinate between two chains or domains, which is hard enough on its own, but you also need to have things like finality and block time line up, where even if you can coordinate producing a block for each chain or domain, you also need to make sure that each block actually gets included in the canonical chain and doesn't get reorged or anything like that, which is more likely on some chains than others. But even doing the initial coordination, I think, is enough of a challenge that we're still quite a long ways off from that type of market. But be interesting to see what others come up in that area.
Yeah, I totally agree with that. We need all input a lot of effort to build the a more ideal question stuff. So yeah, I'd like to hear more from Julian. Yeah, thank you.
Yeah, thanks, Matt. I thought that was a great answer. I think the lack of atomicity for cross-domain MEV is a real challenge. Something that we've been looking into is slot auctions in proposer build separation, and this refers to the concept that in bidding, you don't bid for one specific block, but you bid for creating the next block. And this means that you don't have to commit to all of the transactions just yet. But for example, you could commit to a set of transactions that you want to be included in the next block, given that you know that you've won the auction, for example. And this would allow for some sort of cross-domain atomicity, because you could commit to your transaction knowing that you will be the builder of the next block on Ethereum, given that you know the state of some other blockchain, for example. But some challenges there are some things that were worded by Barnabé in the Protocol Enforced Proposer Commitments post, which is a form of PBS that's a lot freer. And it basically says that PBS is just a contract between the proposer and the builder. And the way that we usually see it in MEV Boost, for example, it's just a specific instance of this contract. So Pepsi, which is the Protocol Enforced Proposer Commitments, is a way more general version of this. But the difficulty here is that there's a dilemma between, are they implementing some version that may be suboptimal, but something that's realistic and something that we could implement, or wait and continue to do the research and only implement it when we absolutely know for certain that we have the best thing. These are the two things that we need to balance. And some work that's being done there is, for example, on the enshrined proposer builder separation proposals by Mike Norder and Francesco. And some other concerns of mine are here that, for example, centralization. How much does it matter how good or bad your latency is on one domain for your position as a searcher on another domain? And how much do these costs matter? So, for example, if we have a lot of centralization, not only is this bad for all of the obvious reasons, we also could get monopolistic or oligopoly pricing in MEV rebates, meaning that value could, for example, leak from one domain to another, even though this might not be socially optimal. So these are the kind of problems I'm interested in, and I'd love to discuss more.
Okay, next is Bridge Brennan. So from a searcher's point of view, so what do you think of the how to achieve a permissionlessness in cross-chain MEV market?
Yes, so in my opinion, there is a problem regarding the transaction propagation, because sometimes you need to understand what gas price is best for certain cross-chain execution, because from my perspective, cross-chain arbitrage can be done minimizing the cross-chain operations. Basically, you can have a basket of assets on both chains of all assets that you try to arbitrage, and you can perform just-in-time trade where you instantaneously sell and buy on both chains. And in my opinion, it's hard to maintain, like, to synchronize the state between two networks. And I think one of the challenges is gas optimization, and the second challenge is like the synchronization between two chains. It both includes the assets, the balances, and the application state if you write your own bot. So I think there are only two challenges, I think.
Okay, thanks, Baron. So next is Alex.
Yeah, so it was really interesting to hear your guys' thoughts on the cross-chain MEV, and yeah, I would like to say that, like, my team in Dbridge, we are building the cross-chain infrastructure to actually prevent cross-chain MEV and to have all cross-chain trades to be protected by default from MEV and from slippage in general, right? And in order to achieve that, we've built DLN, the high-performance cross-chain trading infrastructure that is built on top of Dbridge messaging layer. And DLN is the first asynchronous trading infrastructure, meaning that, like, instead of channeling all the cross-chain value transfer through the liquidity pools, where there is like slippage and AMM price discovery, we are channeling the trades through liquidity network. So, like, users are creating the limit order, and then takers and MEV searchers can play the role of taker, or like private market makers. They fulfill this trade on the destination chain. And the only way to fulfill this trade is to provide the exact amount of asset that was requested on the source chain, right? So there is no way to front run the user. And in terms of the atomicity, wanted to comment here really quickly as well, because, like, in the cross-chain space, there is no way to achieve like atomicity of transactions, and that's not possible, but that's not needed. Like, asynchronicity is a big advantage of the cross-chain space. We just need speed, right? And first of all, the speed of liquidity transfers, or the speed of trading, because in general, like, there are two big components, or two main components of the cross-chain interoperability. First is the transfer of message or data, and the second is the transfer of liquidity, or cross-chain value trading. And for the data transfers, there are also two sort of subtypes. First is the transfer of message, and the word message means that there is a need to authenticate the sender of the message, right? So when the receiver, like the receiving smart contract, needs to sort of validate that, like, the sender was trusted. And for message transfers, the finality normally takes a long time, because it's equal to finality of transaction on the source chain. But the message transfer is not needed in many cases. In most scenarios, the call data transfer is sufficient. And the call data means that you just need to transfer some command. So let's say when you do the $100 trade from one chain to another, you can specify a command to use this liquidity to buy NFT on OpenSea. Or you can use, like, call data to open up position on GMX perpetual trading protocol in the same transaction. And the beauty of differentiation here is that call data can be settled almost instantly. It just takes seconds, right? So, for example, with DLN, you can do like $1 million trade from one chain to another, and plus specify what call data the taker, like private market maker, should execute. And this allows MEV searchers to sort of move liquidity more efficiently. So, as Bridge Baron mentioned, like, MEV searchers can have like balance sheet on the multiple chains, and they can perform the trading or like arbitrage by doing like just-in-time transactions simultaneously on both chains, and then just rebalance liquidity very quickly using cross-chain trading infrastructure, such as DLM, right? And again, for this sort of rebalancing, there is no need to wait like for 22 minutes, because like the long waiting time is needed only when the message is transferred. But like for liquidity and call data, it should be instant, and it will be. So yeah, and my bet here is that like eventually we'll not have the MEV market itself, just because of the asynchronous nature of the environment. But what we will have is like the still MEV market within the same chain, but the cross-chain infrastructure will be used by MEV searchers and like resolvers in order to rebalance liquidity very quickly and very efficiently. Because like the reason why MEV exists in the cross-chain space now is just because of the sort of non-optimal design of existing bridges. It's just like all the bridges are still using liquidity pools and wrapped assets. And in order to channel the transfer, there is a need to swap to and from wrapped assets. And whenever this swap is performed, there is a way to execute like slippage, right? And to perform like sandwich attack or MEV. But eventually, like liquidity pools will not be used, and like all the trades will be settled asynchronously. And that's why I believe that we will not see MEV market on the cross-chain domain. Like specifically, we'll not see it in the same sort of shape as we have it now on same chain domains like Ethereum. So yeah, this is sort of my take on the potential MEV space applied for cross-chain ecosystem.
Okay, thank you, Alex. So as of now, we have like past half of the scheduled time. So I'd like to open the floor to the audience here. So if any of you want to ask a question, or is there any other opinions you'd like to share, please raise your hand. So I'm going to allow maybe one or two audience to ask questions. Yeah, just feel free to raise your hand now. Okay, if there's no question at the moment, we'll continue to our next question. So our next question is actually about the infrastructures. So like, for example, if you want to do a great cross-chain transactions, you need a very, very like secure and efficient cross-chain infrastructures, right? So I'd like to start from Julian. So from your point of view, so which infrastructures are needed for a transparent cross-chain MEV market?
Yeah, thank you. So in my view, atomicity, cross-domain atomicity is actually quite important. So I'd love to talk more about this with Alex. But I think atomicity would allow for MEV rebates, for example, and making sure that price informativeness on both chains is as maximum as possible. So this is something I'm quite striving for, and I would find quite important. But yeah, so maybe as a question from me to Alex later, if you could elaborate a bit on how these opportunities where atomicity could be helpful in my point of view. For example, when there's an MEV opportunity which requires a transaction on chain A and chain B, how would there be a socially optimal way where you do not need atomicity? Yeah.
And what do you assume under the word atomicity? Like within same chain, atomicity means that like the set of transactions are executed in the same block. But what is meant by atomicity for the cross-chain domain?
Right. So with atomicity, I would mean that either all of your transactions are executed or they're not. So let's say that you need to do two transactions on two different chains, or like you have a set of transactions that you want to have executed on whatever set of domains. Then either this entire set of transactions is executed or it's not.
Yeah, most likely that won't be possible if it's like three separate chains. You cannot prevent execution of transaction on the second chain if something was not successfully executed on the third one. But that's possible between two chains, actually. Like if call data is not executed on the destination chain, then just your trade is fully reverted and you get your like assets back in the source chain.
Okay. So I think Alex, you can continue to answer the question, like what kind of infrastructures actually needed for the transparency.
Yeah, I'm not sure about like specifically MEV market, but on the cross-chain space, there are three sort of pillars needed for cross-chain interoperability in general. First is the asset custody, right? That's the infrastructure that allows to issue assets natively on the ecosystem. Because let's say if you have the rollup or like layer 2, to move the liquidity or asset to this rollup, we got to have the ability to sort of custody the asset. And like trustless canonical bridges are the most secure way to custody the asset, right? But like not all the blockchain ecosystems provide the canonical custody solution. Let's say there is no canonical bridge to Phantom and Solana, and that's why like Phantom ecosystem is struggling now with the problems after the multi-chain collapse. But yeah, custody is like the first and very important component. Second one is the transfer of information or the message transfer. And to perform the data transfers, we need to have interoperability solutions, right? And that's like what we are building in dBridge. dBridge is like basically the infrastructure for the message transfers. And third component is the transfer of liquidity. But it's not really transfer, it's the trading, right? Because people sometimes are like mixing up the custody and trading, and that's mainly because like all the existing bridging solutions are trying to solve for asset custody and trading simultaneously. But we strongly believe that like these problems should be differentiated. Asset custody should be solved by canonical bridges, or like if there is no canonical solution available, there is like multi-message aggregation framework that was suggested. And the interoperability solutions should enable the message transfer and cross-chain trading, right? And like DLN, the cross-chain trading infrastructure, the one that we've built on top of dBridge to enable like zero slippage trading between any ecosystem. So yeah, the three components are important in general, and not only for, I guess, for MEV searchers, but like for any users. Asset custody, message and call data transfers, infrastructure, and plus the high performance cross-chain trading. And these are three main pillars. And as soon as you have these sort of pillars between any chains, you will have the ability to combine DeFi primitives on a cross-chain domain very efficiently. When, let's say, the stablecoin protocol such as like CurveUSD, let's say on Ethereum, will be able to open up position on the perpetual market on Arbitrum in order to maintain its peg. Or like stablecoin protocol will be able to aggregate multiple future trading platforms like across Arbitrum, Optimism, and even Solana, and maintain the peg even more efficiently. So that's like the future that I foresee. And I think it's actually like behind the corner. I think like this year or the year after, we'll already see like a bunch of cross-chain primitives that are combined in a very elegant manner. And yeah, it'll be interesting to see how like MEV will play the role in this sort of composable cross-chain future.
Okay, thank you, Alex. So next, I want to invite Matt to share your ideas and your suggestions regarding Alex and Julian's advice. Thank you.
Yeah, so I think now we've gotten into an interesting discussion on how much atomicity is actually needed with cross-chain and how possible it is, which I think is an interesting point. I would probably, similar to what I was saying before, I think for efficiency, maximum efficiency in cross-chain MEV, we do need atomicity. It is very challenging and potentially not possible in some cases, or infeasible, I'll say, in some cases. But basically, the state that we have right now, where, like I was describing before, you have to own assets on each chain, and then you're also subject to partial execution, where partial execution can happen in many ways, right? Either you try to execute two things at once and one reverts, right? If you're doing something where you're executing one and then you're seeing if that gets included before you execute the other, by the time you know if it's included, by the time it reaches finality in the first chain, you may not have the second half of the opportunity on the destination chain. And there's many other sort of variations on that where basically if you can't get that atomicity, you open yourself up to a massive amount of risk compared to capturing MEV on a single chain. And I think if you don't have a solution to that, then it's just never going to be as efficient as MEV on a single chain. But I don't know in what situations you can get a solution to that, because it is a very hard problem.
Yeah, but just to comment here quickly, you don't need to wait for finality in most cases, especially when you transfer call data, right? Because it's all the question of like who is bearing the risk of transaction finality. Is it sender, or is it someone who actually executes your transaction on the destination chain? And the way we designed it in DLN is that like private market makers are bearing the risk of transaction reworks, right? But at the same time, they're competing for the speed on the destination chain. So if you send a transaction for, let's say, $1,000 trade, it's getting fulfilled on the destination chain, and then it's getting reverted on the source chain. As a user, you don't bear the risk, right? You just get another like $1,000, and the risks are sort of borne by the takers, right, by private market maker that fulfill this trade. And that's quite interesting because like MEV searchers will be those who will know how to handle these risks, and those who will be like takers in this sort of system. So yeah, finality is not really a big problem. And I would say that like it's already solved for the cases when you need to execute specific like call data on the destination chain.
So I think we're focusing on the searchers here, though, not the users. So if there is actually an AMM on one chain that's out of balance with, or we'll say all the AMMs, right? Because otherwise it's just single chain. But if all the AMMs on one chain are out of balance with all the AMMs on another chain for a specific pair, you need to execute transactions, a transaction routing through the AMMs on one chain, and also execute one on the other chain in the opposite direction. And whether or not those both execute before the AMM state changes on the respective chain affects your ability to actually capture that MEV or potentially take a loss if they don't both execute. And so I may be missing part of the argument, but I don't think what you're describing takes away that risk. Certainly it's still possible to participate, but I think the risk and barrier to entry remains very high until you have that atomicity.
Yeah, it also depends like on the assets, right, that you're trading. If you have like both assets on your balance sheet, then it's a one thing. You just like buy on one chain, sell on another, and then rebalance. But if you need to like buy on one chain, then to trade and then to sell, there can be you can turn out to be in the situation when you're like stuck with this asset from which you try to execute non-optimality. So yeah, that's something to think about as well, and maybe even to build like MEV strategy around this sort of scenarios. But like from what I've seen, I already saw quite a few cases where people like did an arbitrage between assets that are traded on AMMs in multiple chains. And some MEV searchers like executed like 25% of the profit from a single trade, routed cross chain. And yeah, that's interesting use case like of how cross chain infrastructure can be used.
To add on to that, I think we're talking here about specific instances of inventory risk and adverse selection costs, which are two very well-known frictions in trading. So my hypothesis is that with more atomicity, or the complete atomicity in cross-domain execution, we can eliminate a large portion of this inventory risk and the adverse selection costs, meaning that markets will be more efficient and there's less rent-seeking behavior from searchers, for example.
Yeah, I think that was well put.
Okay, so Bridge Barrier, so what's your viewpoint on transparency infrastructure?
Yeah, I think that in order to have like cross-chain market in terms of MEV very active, I think we need like every chain that is included in the strategy must have like mempool where the transactions can be read from. And I think the ability of different searches to compare transactions in mempools, it can really bring more more features for more probabilities and possibilities for trading, and without this it's very hard to perform like profitable trades, and there are EVM chains that are not compatible for these strategies, and for now L2s as well, not all of them have like explicit access to mempool, but I've read a couple of AEPs that are in progress for Ethereum. Particularly, I think that the one with account abstractions via separate mempool can bring more real use cases to cross-chain MEV, because in my opinion, one of the important aspects are like the mempool, and for now I think there'll be a like geometric growth when these APs get released, because basically alternative mempools will bring more, like as the algorithm they mentioned in the AEP, they will bring more like diversification, and it's gonna be the searchers will have choice on how to broadcast their transactions, and I think there is a lot of work to get done in that direction.
Yeah, I'm pretty sure that. Yeah. So yeah, I want to move to Dr. Yixin. So what do you think of the most important stuff to be done in terms of transparency?
I think this is a very important question. And about memory pool, we also have done a study about the different memory pool service providers in Ethereum, and we found that even in Ethereum, the public memory pool is not so transparent. So maybe this really is aspect we need to improve. And besides this, I think a dashboard which can showcase cross-chain MEV transactions could also be a great starting point to help users and staking holders to know the situation of the market. But building such kind of dashboard comes with some challenges and requires dealing with much dirty work, maybe. And from our point of view, the most challenging thing is to do the affinity analysis between the several non-atomic transactions, and we need to build an algorithm to automatically identify the transactions belonging to the same trade, so that we know which transactions can compose to be an MEV trade. And this is a problem that AgenFi has been dedicated to solving. And currently we are at the forefront of identifying the non-atomic sandwich trades within same blockchain. And we aim to expand to other types of trades using the same approach. And maybe the cross-chain MEV transactions is one of the choices, but I don't know how I don't know if there's enough need or for such kind of a dashboard. There's some kind of trade-off between the input and output ratio. And as for the atomicity of the cross-chain transactions, one thing I want to point out is that the bundle service provided by Flashbots on Ethereum does not guarantee the same level of atomicity as the single transactions that is packaged on the blockchain. Searchers still need to trust the relays and builders. And there's an attack, I think is occurred in April this year, when a validator destroyed such kind of atomicity provided by the bundle service. However, I think this bundle approach has provided some kind of atomicity services that close to that searchers need. So if, in my opinion, if cross-chain protocols can also provide similar services, it may stimulate the development of cross-chain market. So, which I think some designers may consider it. But I also get many other ideas from our speakers from different point of view. And I think this is quite an issue that was further discussion. That's all. Thank you.
Okay, thank you, Dr. Yixin. So I'll move on to our the last question. So we already talked about a lot of topics today, like when dealing all these different subjects. So like my question is like, what's your biggest concern? So I want to start from Alex. Thank you.
Yeah, I think the biggest concern in the cross-chain space has always been security, right? Because there were so many hacks and like billions of dollars of liquidity were lost. Like the reason that all happened is mainly because of the bad design decisions. And second, the inability to sort of differentiate different challenges. As I mentioned, like we should clearly differentiate the custody solution from the cross-chain trading or from the cross-chain value transfers, which is the same thing. And yeah, security will be still like the main sort of focus area moving forward, and that will also be important for the MEV searchers. For sure, because like if you want to have, as a searcher, if you want to have a balance sheet on another chain, right, you want to understand like who is the issuer of these assets. And more like, let's say if you have assets in Phantom, most likely you don't want to end up with the like assets issued by multi-chain, as an example. That's why there is a clear need for some sort of standard for the asset custody, right? That allows to avoid the vendor lock, like the situation when the token issuer locks to one specific provider and cannot migrate seamlessly. And in order to solve this, we actually suggested the multi-message aggregation framework, right? Or so-called MMA, where like the token issuers or like the protocols can actually rely on multiple infrastructure providers simultaneously to have even better security, right? So that like if one breach or one interoperability solution is getting hacked, it will not influence the message transfer capabilities, because like in order to get message execute on the destination chain, there is like a consensus among several bridge providers, let's say like 2 out of 3 or 3 out of 5. And that drastically improves security, especially for the cases when like canonical custody solution is not available. So yeah, security is the first. The second is again is the speed, right? Because liquidity should flow seamlessly, and like the liquidity fragmentation is a big problem. Like everybody's talking about liquidity fragmentation, but actually it's not that big as a problem in case we can move liquidity efficiently and move it at like lightning speed, right? When like it takes us few seconds to get USDC traded like from one chain to another. And for example, the solution that we developed, DLN, allows to trade any liquidity like with as low fee as 4 bips, like 0.04%, and have the trade settled in a matter of seconds. And I really think that like as soon as we bootstrap this sort of global cross-chain trading and we convert it into the global liquidity engine, everybody will start using like non-custodial trading solution in order to move liquidity. So like even centralized venues or custodial exchanges will not be needed because like the trades will be settled by takers or by MEV searchers. So yeah, these are concerns like or overall security or like overall challenges that I have in mind. But I think that in general we are moving in the right direction. Like most of these problems will either already solved or will be solved in the very near future.
Okay, so speed and security, right? So yeah, next let's move to bridge pairing.
Yeah, so in my opinion, I think that it's pretty hard to say at first place, but I think like it's hard for me to say, to be honest. I have no thoughts on that.
Okay, all right, let's move on to Julian. So what's your biggest concern at the moment?
My biggest concern is how we make a market within each domain that reflects market conditions that could develop over the coming like 10 to 20 or however many years. So our goal at the Robust Incentives Group is to make PBS into a mechanism that doesn't determine the market conditions in the coming years, but as allows for any market condition. So this ties into the fact of what kind of contract do we design? Do we design it to be very general, like in the Pepsi post by Barnaby? Or do we work towards something that's a lot more feasible and can be implemented quickly to prevent some of the unbundling attacks, like Yishin mentioned? And these are some other strands of work that we're working on. Personally, I think that we should be very careful about this and maybe make sure that PBS is upgradable to some extent, because certainly we cannot expect what the market conditions will be in the coming time. But something that's certain is that cross-domain MEV will be more important, and implementing measures into PBS that account for this cross-domain MEV could be very beneficial for social welfare.
Yeah, that's a good point. Okay, next, Matt.
Yeah, I think the points covered so far would be the main ones. I think maybe I would just add, I think there's a lot of potential for centralization potentially in how this comes about, right? So we already talked about how right now capturing cross domain MEV is extremely challenging. There's a lot of issues there and risks, and a lot of those risks go away if you do have some amount of atomicity. And that basically comes about by coordinating block production between multiple chains. And if you can do that, the question is, do you open that up to everyone to sort of use in an open competition, or do you sort of keep that for yourself and maintain that big advantage over everyone else that you have and profit off of it? And I think that's potentially an outcome that the wrong actor would find appealing.
Yeah, that's a very good point. So next, Dr. Ishin.
My biggest concern right now is quite different. I want to know actually how significant the user demand for infrastructure related to cross-chain MEV market is. and how many people truly care about this transparency. And because this is a trade-off related to the input and output ratio as a data service provider. So from our point of view, if we want to establish a dashboard to show the cross-chain MEV transactions, we don't know if there's enough need to that is looking for it.
Okay, so we already finished all the questions. Is any audience want to raise a question? Or do you have any opinions to share? Please raise your hand. Okay, I give you guys like 5 seconds. If no one has question, we're gonna end this Twitter space. Okay, all right. Thank you so much. So I guess all of us have learned a lot from this Twitter space, and it's really a pleasure from all the speakers here. And thank you so much for that. And I think we are going to do more in the future because CrossChain has a lot of stuff to discover and a lot of opportunities to explore. Okay, thank you guys.
Thank you. Bye-bye.
Thank
Guys,
you.
have a good one. Bye-bye.
Bye-bye.
Thank you guys.